Scale is quite something. Scale is quite something. Share cancellation. Share cancellation. Tackle the discount head on. Tackle the discount head on. Change perceptions. Change perceptions. Boost dividends. Boost dividends.
Okay, let's unpack this. Have you heard about companies intentionally burning their own shares?
Not literally setting them on fire, I hope.
Haha, no, not literally,
Yeah.
but essentially taking them out of existence.
It sounds a bit like financial alchemy, doesn't it?
It really does, but it's a very real strategy.
And it's central to South Korea's value-up movement right now, this year and next.
Absolutely, the scale is quite something.
It really is. I saw a figure, over 15.5 trillion won worth of shares canceled just in the first half of this year.
That's right, and that's already more than the entire amount canceled in all of 2023.
Wow. So it's accelerating, and we're seeing huge companies involved, Samsung Electronics, Hanwha Systems, Orion, Murray Asset Securities.
The big players are definitely leading the charge.
So in this deep dive, we really want to get into what share cancellation actually is, why these giants are doing it now, and what it means for you listening in.
Okay, so share cancellation. What happens is a company buys back its own stock, maybe stock it already held as treasury shares. Right, shares they bought back previously and just held on to.
Exactly. And instead of just holding them or reissuing them later, they essentially destroy them. Poof, gone.
Okay.
This permanently reduces the total number of shares out there in the market. Fewer shares floating around means each individual share represents a slightly larger ownership stake in the company. Your slice gets bigger.
Which should make it more valuable mathematically speaking. Earnings per share go up, for example.
Precisely.
Okay, so that's the what, but the why. That's where it gets really interesting for me. Why this massive push now in Korea?
Yeah, the timing is key. It's tied directly to this long-standing issue called the Korea discount.
Ah, yes, I've heard that term. The idea that Korean stocks have just been persistently undervalued compared to companies elsewhere.
Exactly. And for years, the reasons cited were often things like weaker shareholder returns, governance structures that maybe weren't super clear.
Especially with the big family-run conglomerates, the chaebol, maybe prioritizing expansion over dividends.
That was often the perception, yeah. A sense that maximizing shareholder value wasn't always the top priority. But now, well, things seem to be changing.
It feels like a real strategic pivot.
It is. This Value Up program is a conscious effort to tackle that discount head-on. Companies are trying to change perceptions, build trust, and attract more investment, especially from overseas.
And how are they doing that? We talked about share cancellation.
That's number one, canceling those treasury shares. Number two is boosting cash dividends significantly.
Oh, yeah. How much are we talking?
Well, get this. Cash dividend payouts hit 37.6 trillion won in just the first half of 2025.
37.6 trillion. Wow.
Yeah, and that's up 10% from the year before. So real money going back to shareholders.
Okay. Share cancellation, bigger dividends. What else?
The third piece is transparency. Companies are making regular public disclosures about their strategies to increase value, being much more open about their plans.
So it's not just happening behind closed doors.
Not at all. The Korea Exchange actually reported, I think 156 companies have made official value-up announcements. Names like Hanwha Aerospace, Suprema, Hanmi Semiconductor. It's becoming widespread.
That's a significant number. It suggests a real commitment. But, is there another side to this? Any potential downsides people point to?
That's a fair question. Some critics might argue, well, if you cancel shares, maybe you have less flexibility later for, say, big investments or acquisitions, or that it's more about a short-term stock price bump than deep structural change.
Okay.
But the dominant view, certainly from the government and the companies involved in Value Up, seems to be that this is a necessary correction. Many Korean firms were sitting on huge piles of cash or treasury stock without clear plans.
Right, which probably contributed to that undervaluation.
Exactly. So this isn't just about shrinking the share count. It's seen as better capital management. It signals, hey, we're focused on returning value to you, the shareholders. It's about building a healthier market overall.
So bring it back to our listener. What does this all mean for you? If you're an investor, maybe hold Korean stocks, or just watching global markets?
It matters directly. Fewer shares outstanding, as we said, can increase the value of the shares you hold. Higher dividends mean more cash potentially landing in your brokerage account.
Pretty straightforward benefits there.
Yeah. And seeing these huge, reputable companies leading the way suggests this isn't just some temporary fad. It feels like a more fundamental shift in how Korean companies view and treat their investors.
A potentially long-lasting change in the market's character.
I think so. If
Yeah.
you zoom out a bit, this whole value up thing, it's not just about the numbers. It's really about building respect for shareholders, increasing trust in the market.
Improving the global reputation of Korean companies.
Exactly. Making Korea a more attractive place to invest. And with trillions of won already flowing into these initiatives, it really could be a significant turning point for their financial history. A new chapter, perhaps.
So next time you hear that a company's burning its own shares, remember, sometimes less is indeed more.
Yeah.
Something to think about.